I caught up with the CEO, Mark Schmidt, a little earlier. Mr. Schmidt, thank you so much for the time. You're at the halfway point. Are you happy?
Oh, we've had a good run. We're pretty pleased where we are on.
All right, so you incurred a massive impairment with regards to Nkomati, and the mine clearly didn't offer as much as it possibly would have. How are you dealing with that entire process as well?
It's a good point you're raising on Nkomati. We're not overly concerned about Nkomati. It is a relatively short life operation, and understandably it is also a low-grade operation. But what has happened in the past reporting period is that we had a significant drop in the nickel and chrome prices, and post the reporting there's been quite a good recovery, so it's not in a bad space where we stand today. It also had shipment delays based on inclement weather out of the port, so there was a stock build-up on the mine. So that and one or two other operational problems associated with the high wall instability has caused a little bit of an upset. But a lot of that is already recovered. So we are in discussions in terms of the future of this mine being a very short life mine. So what we want to focus on obviously is creating value and maximizing value in this last remaining period.
Have you considered perhaps offloading the likes of Nkomati, considering that it didn't necessarily give you the cash flow you required in order to run the operations at Nkomati? It is struggling, and you've incurred a nearly 900 million after-tax impairment there. Have you been keen to perhaps offload it, considering the short lifespan of the mine?
No, I don't believe in the remaining life it's viable, and it does allow us with a significant amount of optionality in terms of what you do in terms of stripping and the stripping ratios. So you'd appreciate that an open pit mine of that magnitude doing in excess of 3 million tons per month is that if you make a marginal change on your strip ratio and consider your life, you can significantly enhance the cash flows out of that business, and we are considering all those options. So whilst it was a short setback in the last 6 months, I think we'll see a turnaround going forward.
The platinum price has done okay of late, but what about that palladium price? That has continued to boost business. How are you making sure that you're getting the most out of that?
Well, I mean, it's really been a big kicker, particularly around Modikwa. Modikwa, uniquely positioned, it's got a platinum to palladium ratio of 1:1, and it's probably one of the operations that will benefit the most out of this rally out of palladium, which, by the way, seems pretty structural, that it's here for some time. But the balance between these two products being platinum and palladium, there's always going to be thrifting.
What about the maximization of getting the most out of the current run in that palladium price? Are you sure you're well placed within your business to ensure that things can continue to run as they are right now, to make sure that that palladium price is something you take advantage of as it currently stands?
Modikwa is in a good space after a long time of ramping up. It's performing within the expectations, within the design parameters as where we position. So the volumes have been pretty good, and so I think the results speak for themselves, that not only the benefit of the palladium, which has come at a good time, but we've also ramped up volume substantially. And so we've also seen out of Modikwa, which is pretty unique in this country, which is high inflation, that it's had pretty level costs over the last 3 years. And in fact, in this reporting period, its costs have gone down.
And what about the remainder of the year? You're looking in any particular direction to perhaps streamline, become a little more linear, become a little more leaner and meaner, shall we say, in order to take advantage of certain areas within the market, certain parts of it that you feel may be beneficial for yourselves?
ARM's focus has always been positioning its operations on the low end of the cost curve and striving and driving towards that to maximize value. So quality, long life, low unit costs have been and continue to take a significant focus in ARM's life. which has positioned us very well today in terms of where we are on the cash position and positioned well for growth into the future.
Regulation in the industry, everything from pricing right through to leadership. Do you feel that you're well placed as well in South Africa's mining sector? Is it a sector that now has the potential to grow, considering that companies are making sure that they're in the right spaces for themselves?
Absolutely. If you take ARM's diversified portfolio, if you look at the margins in the last reporting period, all of them are over 30%, which shows that how well we are positioned and long life. So undoubtedly, we need to capitalize. And as an industry, in particular the support coming out of government, which you would have seen of late, right from the president to the current minister, very supportive of this industry and its growth and its opportunity. And ARM by very nature, is an acquisitive young operation and very keen and focused on quality growth.
Okay, and anywhere in particular in terms of these acquisitions that you're looking at?
No, we pursue a number of opportunities. We have assets and continue to sweat our own assets as well are very important. And our assets have unique opportunities to enhance growth, and a number of them being considered as we sit here. But of course, as an acquisitive company, where there's value, we will grab and we pursue those opportunities all the time.
That's Mark Schmidt, the CEO of African Rainbow Minerals.